Greetings, members, one and all of the Salivation Nation. Gold prices are moving right into record territory. Let's explore. Yes, that's right. It is something to behold, folks. Just as we saw with silver's exciting bumps upwards, now we're seeing it with gold moving into record territory now. In fact, this is starting to make news in the major outlets out there. CNN talking about it with silver, and here Fox Business with gold. Gold prices zoom into record books, set sights on further gains. This is from yesterday, actually. The precious metal finished at 1889.10. Well, today, gold rides to a new record here. We've got Market Watch, which I kind of like Market Watch. Kind of gives us sort of a balanced view of the metals, although obviously they interview gold bulls and silver bugs and the like. But essentially they kind of look at it from a more of an even keel rather than Kitco or some other place. But nonetheless, this is very interesting here. It says gold rides to a record with prospects for $2,000 an ounce stronger than ever. It says that the $2,000 mark for gold will be very easily broken, says an analyst. Let's take a look right now where the markets are right now as of the recording of this video. Here we have gold way up there. Now it's above $1,900 an ounce. We're just dollars away now from breaking the all-time record in terms of the dollar amount per ounce. But you have to keep in mind, just as would be the case if silver were to get to record levels, which we have a long way to go there, but adjusted for inflation, it's still lower than what it was in 2011. But make no mistake, we are getting close, much closer with gold right now. Fascinating in times indeed, for sure. Gold futures posted a record settlement on Friday, along with their strongest weekly performance since early April, with calls for the never-before-seen level of $2,000 an ounce for the precious metals coming in louder than ever. I think this is kind of interesting, this little picture here. This is a life-size gold horse made of bronze and coated with gold foil. Displays at the Japanese jeweler's shop in Nagoya. Very interesting. I wonder how much gold is on that horse if you took that foil off. Probably not much more than an ounce, if an ounce. That's how much you can stretch gold out. Gold and silver bulls will face a real challenge over the next 2 weeks, said Shantane Karnani, a chief market analyst at Insignia Consultants, in a Friday note. But if tensions between China and the U.S. escalate, and the U.S. sees a sharply daily increase of COVID-19 cases, then gold and silver will only rise. He believes that price corrections will, if any, will be mild. The $2,000 mark for gold will be very easily broken. August gold rose $7.50 or 0.4% to settle at $18.97 an ounce on the COMEX Friday after trading as high as $19.0460. It's now back up, as we saw, over $1,900 in 1902. For the week, prices rose 4.8%, the biggest weekly percentage climb since the week ended April 9th. The contract topped the most active contract settlement record of 1891 from August 22nd, 2011. Based on records dating going back to November 1984, according to Dow Jones market data, the record's most active intraday level still stands at 1923, $1,923.70 an ounce from September the 6th, 2011. The front-month July gold contract, which trades on significantly lower volume, notched a record for a second session in a row and settled at $1,897.30 on Friday, up $8.20 for the session. That's a record for the front-month contracts based on data going back to 1975. Wow. There's a lot of push and pull factors in the backdrop of gold's rally, said Bharani Krishnan, senior commodities analyst at investing.com. You have stimulus expectations worldwide after the European Union's $750 billion coronavirus relief plan, even as Congress goes back and forth on its own CARES 4.0 package. Wow, 4.0, it's hard to keep track of them all. for COVID-19 that should bring another $1 trillion into the mix. What's $1 trillion amongst friends, right? The U.S. dollar also continues to break down, pushing precious metals higher, though simmering U.S.-Chinese tensions are supporting the greenback from a complete meltdown, he said in an emailed commentary. Silver prices, meanwhile, also recently rallied to their highest settlement since 2013, with the September silver contract on Wednesday settled at $23.14. You hear that? That's a scammer calling. And I'm not going to take it. I'm going to resist the urge to take the scammer call. That's right. Silver prices, meanwhile, also recently rallied to their highest settlement since 2013, with the September silver up 0.01 percent contract on Wednesday settled at $23.14 an ounce and ended Friday at $22.85, up 15.6% on the week. Let's take a look at where these prices are. That's right, $22.85 is where it is now. It did get over $23, but it's pulled back a little bit, and it's now starting to recover a little bit from that movement for sure. All right, this is still very exciting for sure. Ordinarily, this is the quiet time for gold, summer doldrums. Not this summer. It is hot, hot, hot. Oh, yeah. And said Ross Norman, Chief Executive Officer at Precious Metals News and information provider Metals Daily. Well, not this year. In a forecast issued on the London Bullion Market Association in December 2019, he had forecast that gold prices would achieve an all-time high this year. Given that, he said there's no surprise it has achieved it. The move has been quicker than we had expected. Yes, that's for sure. But they were. I remember posting videos towards the end of last year and into early this year about these analysts predicting $2,000 and even $3,000 gold. In reality, virtually everything is going gold's way. Record debt, epic increase in money supply, silver catching up, negative yield, real yields, and even a dollar correction, Norman told MarketWatch. George Garrow, managing director at RBC Wealth Management, told MarketWatch that gold's upward momentum is caused by a perfect storm of pandemic headlines, benign dollars, and interest rates as global economic stimulus grows. This may last longer than usual cycles as the pandemic casts a shadow on Europe, South America, and the Far East as well in the U.S., he said. And those are things that are going to bode well not only for gold, but I believe silver. As I mentioned before, that even if we don't see silver necessarily close the gap between the gold to silver ratio, it will probably ride its coattails at its current length and not necessarily catch up. But who knows? It could go the other way too. The narrowing of the gold and silver ratio we've seen over the last week here has been a sight to behold and a pretty dramatic shift. It wouldn't take much more of days like we've been seeing for it to narrow down to what we would consider at least normal levels and then squeeze into what it should be performing in previous bull runs for both metals here. Contributing to gold's safe haven appeal are escalating tensions between China and the U.S., the upcoming U.S. election, worries about an increase in debts from continuing stimulus and unrest elsewhere. Gold prices have climbed up by around 50% since December of 2018, when the metal bottomed under $1,200 an ounce, said Adrian Ash, Director of Research at Bullion Vault. That's the fastest two-year gain since New Year 2012, he said. The yellow metal has also climbed around $400 an ounce from March COVID-19 crash, its steepest 17-week gain since the very tops of September 2011, and before that, January of 1980, said Ash, adding that trading volumes on Bullion Vault, an online platform for physical precious metals, reached $28.9 million, which was the third busiest day ever after March 17, when the COVID crisis really broke, and June 24, 2016, the day the UK's Brexit referendum result. Hot money's finally joined in, said Ash. That said, analysts warned that gold could soon see a correction. I'm glad they said that. Prices could move lower on profit taking. That's very true. We could see a correction just like we did see a little bit of that in the silver markets, as I've reported on earlier. Yes, indeed. At the same time, the stock market is looking disconnected from the real economy, and a sell-off could see margin calls again like we saw in the first quarter, prompting traders to sell gold to cover those margins. Gero voiced caution as well. Next week, options expirations on COMEX, and in the money options becoming the futures contracts and needing cash margin could bring traders profit-taking in gold, he said. Even if there was a pullback in gold prices, however, Norman said, all this would do is provide a fresh buying opportunity, so the window could close quite quickly. That's right. And that brings us to this, why they believe that now is a good buying opportunity, says this investing pioneer. In emerging markets investing pioneer Mark Mobius, his opinion on Friday interview with Bloomberg TV, said that I would be buying now and continue to buy, Mobius told the business news platform. If gold prices end Friday's session above $18.91 an ounce, it would mark its highest finish on records going back to 84, which it did do that. And so very, very cool. In fact, it talks about the markets. He says investors find themselves in a curious spot where buying stocks and gold are both viewed as ways to preserve capital and avoid erosion from inflation. We're in a very interesting situation where people are looking to stocks to preserve their capital because stocks will adjust to inflation and also gold. They're sort of hedging their bets. The investor said that low and negative interest rates have prevailed in parts of the world, including Europe, have reduced the opportunity costs of owning gold, providing further support. Slack in supplies of physical gold from miners also are dealing with the virus outbreak, also could further propel prices of precious metals. With this COVID, I assume that mine output would be declining for gold, and of course that puts additional pressure towards the price, and also that applies to silver as well. But I would caution you, even though it's strange he makes that correlation to stocks being to preserve capital and erosion from inflation. That's kind of strange. We know that gold does that, but stocks are investments and have the potential to go either way, much more so, and they can go to zero. They have before. But what about gold? Gold is a stable hedge against economic instability of all sorts of styles and kinds, and I believe it's definitely a good opportunity, but because of where things could go and the caution we said earlier, I don't know that I would necessarily advise anybody one way or another. I'm probably going to be buying some gold soon, though, but I have my reasons, and I'll talk about that if I do a video on it, if I make the purchase. Looking pretty likely, but we'll see. And nonetheless, there it is. There's where the markets are. Fascinating indeed. It is crazy what's going on these days, and the media are covering it, and gold is starting to make headlines again. It's up there, folks, over $1,900, $1,902.10. Hope you enjoyed this video. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.